Good evening, traders. Welcome to TopGunStockTrading.com. This video is for Wednesday, January 22nd, 2014. Let's get right into the action, folks. Today was a very light trading day. And I think I know the reason why is because the snowstorm on the East Coast there kept the institutional traders, probably snowed in at their house there. Look at the volume here: 61 million shares traded hands. If you look back over the last 52 weeks, I don't think you can find a day that has 62 million shares traded hands as low as that, unless it's like a half day before Christmas or Thanksgiving, something like that. But very late trading day, and they could still only get this market up 12 cents. So what's that tell me? I'm still seeing weakness. I know it seems kind of crazy, and you're like, but look, the market keeps going up. It keeps getting edging higher. It keeps going up. I don't understand the weakness. Well, the weakness is the volume, such light volume, and they can still only get this thing up 12 cents. I got a trend line I wanted to show you all the way back from 2012 at the peak there. We've hit it again in 2013. We've come up to the end of 2013, hit it a couple times in 14. This is basically the max move, if you will, in my opinion, of this spiders. Okay, so it's an upward sloping trend line, and most average trader thinks that you can break out from an upward sloping trend line, and the truth is that you cannot. You might go above it for a couple days, but you'll always come back to that line and probably most likely below it. And I apologize for me changing my scales here, but I'm trying to scale into this thing so we can at least see the last week of trading. I have it so spread out here for you guys, just to show you that trend line. And forgive me for taking a couple minutes here, a couple seconds here, and getting into this trade here, or this chart here. So here we go. Here's that trend line. You see it peaked above there a couple just right before the end of the year. There, it came right back in, went back up and touched it again. Had a significant drop off. That was last Monday, I believe. It came back into it 5 days ago. Hit it, came back in. So it's stumbling on that line. It's up on light volume today, and I think yesterday was maybe a light volume, if anything. Light volume up 50 cents yesterday, up to 12 cents a day. Very light volume. Again, 60 million shares, nothing to it. Like I talked about yesterday, you'll see the gap up. Same thing happened yesterday, happened today. You see the gap up. Now, granted, this is on a much smaller scale, just due to the volume or the lack thereof. What these institutions will do, they gap up the futures, get the market up, get the little guy in. Again, a much lesser scale today than yesterday, but you can also see that the volume is less than it was yesterday. You gap it up, sell it off to about 11:30, 11 o'clock, 10:50, 11 o'clock, kind of float the market, light volume sets in, and the market just kind of floats up for the rest of the day. Now, this is a bear in spirit of bear flag. Okay, so you get this large down move, and you get inside action float. That is a bear flag, and that's not a bear flag, but it's in spirit of a bearish flag there. It's a bearish pattern. So I still expecting weakness in this market. Still expecting this market to break down a little, get some sell side pressure here tomorrow, and maybe even into Friday. Although Friday is usually another light volume float. Institutions are away, traders are away. Could take the early weekend. So Friday afternoon, 11 and 12 o'clock on Friday. Usually everybody goes home, and the market you'll see the nose drop off, and the volume in the market just kind of floats higher as the average investor are trading the market at that time on a Friday afternoon. All right, so that's my view. I'm still bearish on this market. I still see weak side action on this market, even though we're just under all-time highs. And that's another signal. We got an all-time closing high here, 184.69, back on New Year's Eve there, and we have yet to be able to close above that. So that tells me that shows weakness in the market. If you ask me, it can't get enough strength to get above that closing high. So once we do, or if we ever close above that closing high with some authority, then I'll change my stance and go into a more neutral to maybe even a bullish stance, a positive stance. But until then, I am still bearish on this market, like we see it, like I explained earlier. What else we got going on here? USO, what a day by the USO. USO had a real good a gap up. You see, last week we were talking about these moving averages. I've been talking about the bow tie a little being resistance, but I think I said last week it would be minor resistance, make it a one-day pullback. We didn't even get that. We got a gap above the 20 there, and it just kept on moving today. I see some significant resistance here at this gap fill. The close on that is 35.32, and that's coincides with the 200-day moving average. So I'll be looking see what kind of pattern this thing. If this can go into that moving average with another 2 more up days, or to cumulative a 3-bar surge into that 200 moving average, I'll have my 3-dimensional trade there with my price action on the gap fill, the 200-day moving average, and then the pattern, the 3-day surge or 3-bar surge into that pattern. I'll take that short every time, and I'm going to take that via the SCO. I'll pull it up here real quick for you, just so you can see. Now this is a 2-time bear ETF for USO there for oil. You can't really read this, go off of this charts for your entry level because of the 2 times, and there's some distortions involved here with futures contracts as such, so they can get the 2 times bear action on the oil market. So I don't go off of this chart to get my entry. What I'll do is I'll go off the USO, calculate that 35.32 level, whatever entry price I want to do, 35.32, and I'll come up here and go, okay, that's 76 cents away, whatever percentage move that is off of that price, times 2, since the SCO is a 2 times bear action, so I'll 2 times the percentage, and then calculate my entry price down here. And I can tell you it's going to be about whatever this closing price is. Again, 31.58 is going to be about. It's not going to be my exact entry. It'll be about that. And again, I'll have to wait and see if we can get a 3-bar surge into that resistance level. Again, so I'll wait and see tomorrow, see how it looks, and then looking for Friday possibly entering in that short. We'll see how it goes though. Again, I need the pattern to go into. I just can't have that price level, or that moving average. I need my third reason, or my 3rd dimension for that trade to get that 80% success rate. Taking a look at gold. I'm not sure if you guys got a chance to read the article. I'm bullish on gold. There's another article out either yesterday or today about how I think it was today on the CNBC website, on how gold's going to sell off this year and how bearish the institutions are on gold. They don't believe the hype. They don't play right into their hands. They're trying to get the little guy bearish on gold, so he'll sell his shares and they can just basically buy his shares at a low price. My entry on gold, again, if this continues the way it is, I'll show you what I'm looking at here just to kind of illustrate. I got this move up, and then basically sideways consolidation. That wasn't a very good what was that? Let's draw it up here. So you get basically the flag pattern. You see what I mean? Basically a flag pattern. So you move up in a perfect, not a perfect, but in spirit of bull flag, moving above those moving averages. So where am I looking for my entry price? First of all, I will get rid of these drawings so I can show you what I mean. So my entry is going to be at this gap fill right here. So I got my pattern here. I got my gap fill right here. So at that close, 118.46, again, coming in, that pretty much marries up with that 20-day moving average. And again, we'll see how it goes into that average. Well, I don't want to see a big sell side pressure tomorrow into that. I want to see just kind of a low, a nice easy descent or float down into that level. Maybe on Friday we'll look to go long on gold based on what I'm looking for there at that level. So again, we'll see how it happens. But 118.46 is what I'm looking at right there. Again, I'll put it on the Fox 3 alerts. Let's look at some trades we are already in. First of all, we got into long the Canadian dollar today, and I put that on the Fox 3 alerts. I just posted that we did trigger into that trade. I have a master level down there at 89.75, a pierce of $90. I also have a 3-bar surge on the weekly end of that level as well. So my master level, I calculate, it's proprietary how I get that. So, and then I got the 3-bar surge in that level. So I always, with the master level, I'll need one other factor just to get that 70 to 80%. And that 3-bar surge is definitely my other factor there. And I'm trying to scale out here to kind of show you where there's also another level further out that we can look at for FCX at the 89.75 level. It's this pivot low right here. You can see this pivot action here coming in right there. If you look on the top of my screen there, we got the high low closing up, and you see the low 89.75. I got that pivot there. Is a gap fill. It's a pierce of an even number of 90, and I got a 3-bar surge on the weekly. So that's what I'm looking at for that trade, along the FXC or along the Canadian dollar. What supports this trade as well is if you look at the UUP. Let's see if I can get it fast enough here. I don't want to waste anybody's time here. Yeah, it's not on the weekly. The UEP I haven't shown. This is the basically the dollar index. I also have the futures on the dollar index over here off your screen where you can't see what I'm looking at. But there's the dollar index as well there. And I see on the dollar index coming into the weekly, we're coming into some resistance on the 50-day on the weekly there as well as this pivot high that we pierced today. Another reason why I went short on the basically, I'm long the Canadian dollar or short the U.S. dollar versus the Canadian dollar is what it is. So what it ends up to be. So basically, if you buy the FXC, that's the ETF. All right, we'll see how that goes. Let's check out AREA. I am in. Still looking good. This is the weekly chart. It's got a some 20 moving averages coming down. However, it's been building some bullish. Now this is a almost a bull flag, a perfect bull flag. I talked to you in one of the early videos what exactly we're looking for. Basically, a move up and then a perfect bull flag is 90 degrees. Okay, you can see 90-degree sideways action on that. That's what a bull flag is. In spirit of is kind of a slight downward angle on that flag. So AREA is showing me that the last 5 weeks. I entered this maybe 2 weeks ago. I posted it on the traders forum that I was entering this trade. And I'll show you the daily chart I'm looking at. Again, that move up, sideways consolidation, right around the moving averages. I got the 50-day moving average as support underneath. Okay, so we're just waiting for this thing to play out. Waiting for this thing to pop, build enough pressure to pop up there. And again, on the weekly is a 636 average there that might provide some resistance. However, this pressure building below it is going to make it enable it to get through that level and continue on through. I'm looking for a pierce of I think 9 on this. Yeah, so I'm looking at these pivot lows down here. Oh, that's not it. That's all right. 16. Are we too greedy? To be honest with you, I don't see any resistance once we get past that weekly 20 MA until you get up in here on this next pivot about $10. So I'm looking for $10 pierce of $10 on this trade to take profits, and that'll be a stellar trade if that happens. Again, we'll continue to monitor this pattern, bull flag, as well as on the weekly there. So I'm still waiting for that thing to play out, and I think it still will. CNDO, I did take half off last week, as per the traders forum. I told you I was going to take profits on half of it. It's popped a couple times since then, and it has since come back in. But I'm still letting this thing play out. This pattern looks similar to the ARIA. It's got a pop and sideways consolidation into that moving average. You talked about when you get sideways consolidation like that, and the moving average moves into price action, you usually get a pretty nice pop. Okay, so I'm going to continue holding this. I've already sold half off this pop. And I'm just waiting for the other half to let it run. I got a break-even stop, so this is a free trade. It's free money if it can run. If not, I stop out break-even. No big deal. DXM. I looked at this today again. I'm in this trade. I haven't taken any profits on this trade yet, but this is shaping up to be a beautiful, beautiful trade setup. So if you haven't got in this trade, man, this is one of the better setups out there. It's again, monitor or mitigate your risk by your a smaller position size, because these things can be volatile. As you can see, back in November it was as low as 428. So that's, $1.50 off a 6. That's a 25% move to the downside possible. So you have to mitigate your risk by adjusting your position size so you don't bring emotion into your trade. So you don't care about if it goes down to $4.30 and you lose however much money that is, you're not going to really get emotional about it as it goes down. Okay, so that's how I mitigate. That's how I mitigate risk, and that's how I check my emotions at the door. But look at this pattern. This pattern is like the other ones you saw, a big move up, sideways consolidation, bull flag there, right above a moving average, and it's coming into a time factor here. So this is probably one of the better patterns I've seen. I'm already in this trade at 598. I bought it last week. Let's see. I believe I bought it right as it hit this 50 moving average, because I bought it off this big move up and the kind of in spirit of bull flag into that moving average. I bought it. It did pop the next day, not as high as I was looking for. I held on to it, so it sold off a little bit, and then now it's popped back up. So I mitigated my position risk by my position size, so I wasn't really worried about this volatility. It didn't really bother me, but this is shaping up to be a nice pattern there. So nice looking setup there if you want to take that. DXM. Corn I'm in. I believe this is a Fox 3 alert as well that I am in corn. This is, again, if you get the trend here, bullish patterns, nice flag, nice move up with sideways consolidation or slight drift downwards, and that's shaping up to be a nice in spirit of bull flag. Looking for higher movement there. I think I'm out of the money, 7 cents on this trade, so no big deal. It's a no-brainer to me. So again, stop loss is going to be, I believe I put on the Fox 3 alert below this low here. Not a big deal. I did IBB. I am short IBB from 248. I put that out there as well. And if you want to look at these alerts as they happen, you'll have to get on the sign up for the membership there. It's free. It doesn't cost you a nickel. But it does give you these Fox 3 alerts. It gives you the insight on those when I'm buying and when I'm selling on that. I'll sometimes put them on the traders forum just to real time if you happen to be on there and you get that. I automatically post to the Facebook page as well. So like us on Facebook, Top Gun Stock Trading on Facebook there as well, and you can get those alerts when I put them on traders forum. But you can also monitor the traders forum there, and feel free to post your own trades on there. It's a forum, so it goes both ways, and I don't claim to know everything about trading. I do have a system, and it has worked pretty well for me. I'm still developing that webinar, still in process, under construction. So when I get that all complete and ready for prime time, I'll be looking to fill up that class. Again, looking for March time frame. All right, let's look at IBB. I sold this thing short at 248. It still has some buy side pressure to it. These patterns are called dojis. They usually signal a pivot point in a stock. I say usually because they don't have to. but usually they do, especially if they are paired with some volume. So if you look at the volume over the last a couple months or whatever, a million shares on this thing is above average volume. So we're getting the bulls and the bears are battling this thing out here at the top of the last 3 days. So far the bulls have won, but we'll see when all the buyers run out and the sellers start to win. That thing should start to come down. Again, that's the IBB. All right, BAC also short, up 14 cents today. This thing, again, this is one could say that's a bull in spirit of bull flag as well, with that move up and then sideways consolidation. And of course, I would agree with you because that's what it is. But I would also argue that at the tops of charts, bull flags have a higher tendency to fail than as well as bear flags at the bottoms of charts. So this thing is basically at all-time highs. You got this candle pattern here, which I would call a topping tail. Again, come on over. Once I get that webinar out, I'll explain to you what a topping tail is. It's a pretty good signal. Either a topping tail is obviously a top. It signals a downside action. And the opposite for a bottoming tail would be a signal upside action. So when you see it at the bottom of charts, basically the mirror image of this flipped upside down. You see that at the bottom of a chart pattern, such as here. I don't think that is quite considered a topping tail, but it's pretty close. I'll expand that out for you, just a little lesson here, what I'm talking about. You see one of these, this is a bottoming tail, or pretty close to bottoming tail, higher than usual volume. Usually signals a pivot in the stock price, and as you can see, that thing moved up the rest of the month there. So again, they're not 100%. Nothing in trading is 100%. You're just an odds maker trying to make the odds and take the trades that are when you have the odds in your favor. Some will say that day trading and swing trading is gambling. I would argue that it's not gambling. You could go to Vegas and you gamble. The odds aren't even in your favor. Your best 49% or whatever the percentage is there on the roulette wheel, I think, is the best percentage in the casino, and that's about 49 and some odd percent. Everyone else is less than that. So you want to stack the odds in your favor, and that's what we do. We teach the 3D system to basically what it boils down to is making odds based on chart patterns, volume, candlestick patterns, and other proprietary techniques that we teach in the 3D system to maximize your odds in order to get in the trade and be on the right side of the trade. Again, we don't care which way the market moves. I could care if it goes up 1,000 points or goes down 1,000 points. I just want to be on the right side of that trade. So BAC right now, 15 cents out of the money on this. I sold a bear call spread on this. Expires February 21st. So 15 cents out of the money on it so far. Not really worried about it. If this thing confirms above this high right here, 1742, I'll look to exit that trade. Again, you want to know when you're wrong so you can get out early and limit your losses. All right, so that's my exit on the BAC. WIN is another short I'm in. Pretty good sell side yesterday. It topped out at 216.99, basically 217. And this pattern right here, basically reversal. If this goes down, I won't call it engulfing. If it covers more than half of the previous day's candle, so I'm doing this math on the fly right here. It's 6 3/4. Half of that's 3 3/8, so 212. 60. So what it close at? 212.27. So technically that is a reversal candle on that. Hoping for a engulfing. Basically, engulfing would have closed below the previous day's low, and basically the whole candle, red candle, would have been outside of the green candle if you follow me there. In any case, it's definitely a reversal candle. It came on some higher than average volume, so that tells me that at least the near-term top for WIN is in, and that's what happened today. You got a lower low today, so that is also a bearish signal that there's some further downside action in WIN. Your first sign of support, or first area of support, is going to be this 20 with this pivot here, and again, that's going to be a minor resistance level, or minor support level, if you will. I expect maybe a one-day bounce on that, if that, and they continue on down lower. So that's my trade on WIN. I covered FXC, I covered corn. Target, I listed this, put this on the Fox 3 alerts yesterday or last night. I think it was last night. I'm not sure if it was the night before or not. 58.26 is my buy level. I'm looking to go long on Target at 58.26. All the negative news in this stock, the whole debit card, credit card, fraudulent scam that's going on has put some negative karma in this stock, and when everyone else is negative, I like to go the other way. I'm contrarian. So here's what we're looking at on this 58.26. Basically, we're looking at this pivot low right here. The pivot high before that, basically support resistance line here, 58.26, as well as the 200 day moving average. And again, this is a weekly chart, so the 3-bar surge tomorrow still contains, and it will be in this candle. So if I can get a little lower surge on that same candle, a 3-bar surge into the 200 on the support resistance, looks like a nice trade setup from here. So 58.26 is going to be my buy. I just gave one to you, so you don't even have to sign up and become a member to get that trade. But for the rest of them, you do. So I usually won't do that, but I'll give that one out, and we'll see how that. You can follow it. Don't take my word for it. Go ahead and see how I do. I would say don't commit your own money until you're absolutely sure. And obviously, even after that, you still need to push your own buttons there. So, hey, one of the traders, one of the members here, brought this to my attention. He's in this trade. He bought it at $69. I think he said his entry was the other day. Might have been Friday. Not sure what day he said he got into this trade. I think it was Friday. It's either 16th or 17th. I don't know. He's in it at 69. Very nice support level. He basically nailed that support, and he's in there for profits now. For me, I see some significant resistance here at this gap window here. So at the close of this candle here, 71.63, that's where I would be taking at least half off if you can. Take half off at that point. If you're in an option or something, you only have one contract. Over to you. I'm not gonna obviously tell you how to trade your account there, but if it were me, I would be taking profits at 71.63 right here. Yeah, if you're a gambler or you want a little bit riskier, risk appetite's a little bit more, maybe you wait to the 20 here, or maybe even a gap fill level up higher. But for me, I like to take money where I can get it, and I would close that trade out at 71.63. So that turns out to be a nice trade. And the reason why I say that, this is a bearish pattern setting up right here, and I told him. Actually, you can see on the Facebook page, on top of Stock Trader Facebook page, you can see my response to his inquiry. It's a large down move followed by drift up. That is classic in spirit of bearish consolidation there. So I expect the first resistance is right here at this 71.60. That doesn't make sense. The open of that day, 75.45. Excuse me. 75.45 is where I would sell that or take profits on that trade. 75.45, I was reading it wrong. And then the 20, like we talked about, a little higher, and then the gap fill up here at $80. Here's some $80. So over to you on how much risk you risk averse or risk appetite you do have. But that's your first resistance level at that point. Over to you. But it is a bearish pattern setting up right there for a larger move down. My calculation, my master level on this is 61.92. So that's where I see Herbalife going before it gets a significant support. All right. That's about all I got for today, folks. Again, light volume day. Classic sell side action. Gap it up, sell into the weak hands or into the average investors, and then let the light volume just kind of float it up. Same thing we saw the previous day, except on a smaller scale. So be very wary. This is, make no beans about it, this is a bearish pattern setting up. So I see weakness in this market like I've written about and like I've said on every one of these videos. Again, I've been humbled by these markets, and I've been proven wrong. So we'll see how it goes. Like I said, if it gets above that all-time closing high, then I'll change my stance to neutral to bullish. But until then, I am seeing some sell-side pressure, and it's coming in the cycle. We're inside the cycle there for a minor move down. All right, folks. I will see you on the charts tomorrow. Until then, take care. Thanks.